I chose this topic, budgeting for nonprofit organizations, because I'm very passionate that successful organizations, whether it be a nonprofit or a for-profit entity, has a good budgeting process in place. And the budget is not only the financial information, it should incorporate operational, and it should also serve as something a lot of people don't think about, is a financial control mechanism for the organization. I bring this up. I see many of our clients on this call, and I know you have budgets, but I have run into organizations in my career that did not have budgets, and that's in the for-profit and not-for-profit sector. And whenever I run into an organization that doesn't have a budget, particularly if I'm sitting on the board of one, I have a very uneasy feeling. The budget at least gives me an idea where we're headed for the year. It allows you to be proactive, that if you do the budget and things aren't looking good at the end of the year and you're not where you want to be financially, it gives you that time to either raise more revenue, make expense cuts, talk to banks about getting short-term financing to get over those humps. But if you don't have one, it's all reactionary. You're looking at your checkbook, you're trying to figure out if we can make the payroll next week, and that's not the place you want to be in. You want to be looking at that ahead of time and getting that in place at the beginning of the year, and the budgeting is the way to do that. So like I said, I'm very passionate about organizations having budgets. Just background, I'm a member of the firm. I joined in 1990. I've worked long enough now that I have people working for me who weren't born when I started working, which means I'm getting old. I co-lead the SEK's nonprofit practice, work with a lot of healthcare entities, and on the weekends I like to typically shoot sporting clays, but I do shoot skeet and trap too. I find that's more entertaining to me than trying to chase a white ball around a golf course. And I usually hit things, usually homes, on the golf course. But this way, at least I'm hitting things I'm supposed to hit. So, but I think before we get started, it's interesting to start out all the excuses I've heard over the year. The first one came from a very successful for-profit entrepreneur that his budget was at head. He did not need to have it written down. Now, I would say probably if he had a budget in his head, he had started the process. But if you don't have it written down and communicated, you're not going to be as successful as you could be, because in that organization he had several VPs, other controllers, and if they didn't know where he was going, I'm not sure he was successful as he could have been in the end if they would have known what his plans were. The next one was my dad's favorite in running his farm. Why do we need a budget? We have no idea how the next year or month will be, so we could not possibly prepare a budget. So my dad used that all his life when I asked him, what's your budget for your farm? However, he did say in the 1950s he had a budget, but apparently in 1966 there was a drought and they didn't hit their budgets. And they said, we can't rely on these anymore. So he stopped. The other one I've heard different businesses say, we have no debt or need for loans. The only people who care about a budget is the bank. And that is a true statement probably, but if you're going to run into financial difficulties during the year, it's probably good to have that understanding with the bank before you get in that trouble versus when you get into it, because if you're going to need money, banks tend to loan to people who don't need money, but if you need money, they tend to be much more particular who they loan to. So you should try and get that information in place ahead of time. The other one, it takes too much time and resources, neither of which we have. My argument would be if you don't take the time now or spend a little resources, it's going to be a moot point because you're not going to be around to have time or resources. And the other one is budgeting is only for big organizations. The issue here is defining big, which tends to be relative. If I'm a $100 million company, does that mean I'm big? I might not think so, but somebody who's only $1 million might think I should have a budget because I am big. So it's too vague a term. Big is relative to who you are there. So these are the excuses. Let's move on from excuses and get into having a budget here for the organization. So what should we worry about is it's a short-term financial plan to achieve your program results. And as I said, it's one of the fundamental operational and financial planning and control tools an organization can have. And I believe all the well-run organizations I deal with that have been successful have a good budgeting process in place. and it allows them to be proactive and come away with changes that are coming up for the year. I also I believe in this too, failing to budget or prepare for next year is just preparing to fail. You're not taking time to properly plan out where you're going to be and what you need to do. It's a short-term roadmap. It is a short-term roadmap. It's 1 year with the pace of technology change. I think short-term is getting shorter and shorter, but typically the budget would be 1 year, and it should really align with your strategic plan. You don't want to get a budget or programs in place. It's not in line with your strategic plan. So I always look at it too as a good time, pull out your strategic plan, reboot, see where you're at on that, put the budget together in line with that, and reboot the organization so that you're back online with that and trying to achieve your goals. Also, it allows you to determine if financial resources allow a program initiative to be accomplished. So with the program people involved, allows you to see if you can continue to do that program, or if there's some changes you may need to make in your programs or what you're offering there. Now, putting together the budget here, there's a multi-step process here. And the first process should be here to get my little thing off the screen. It would be assemble a team. Now, obviously, upper management, CFO and CEO, they would be involved because in the end, they're responsible for driving the process, making sure that the budget gets accomplished and presented to the board for presentation. Now, small organizations, it may be okay to have them providing direct input into how many program staff you're going to need, program supplies you're going to need, because it may be they're providing some of the program activities themselves. But as you become a larger organization, I'm thinking in this case, a healthcare entity or a hospital that has several levels of management between them and the frontline workers. The ability to put in what's needed to do the job is not there. So what does that mean? One, it means you should bring in program staff to the organization to have them involved. I mean, they're the frontline people there, and it may be program directors dealing with the staff in this case, but they know what the human resource needs, they know what the supply needs are for the organization, and they can put in input whether or not they need to expand the program, if the program's not doing as well, if they need to cut staff. They would be some key people in that. I think obviously people think the accounting staff would be involved, and that's true. They bring the historical information that can go into the financial reporting process. And they're also going to be the ones at the end who's probably going to have to put it into your budgeting system to produce your budget to actual reports. So they're a key player in that as well. Also, I would recommend having your human resources staff involved. If you're going to be expanding your programs, they're the ones that can give you insight in. They'll have to know to hire people. They're also the ones that can give you insight into compensation trends. Should we be raising salaries for the staff we currently have? How much? What's our benefit package compared to our competitors? And I actually think more now than ever in the hiring process and trying to hire people. Our organization, probably like many of yours, is struggling to find good talent out there, or even available talent. There just doesn't seem to be hirers out there to hire. Those people are very important now to help make decisions on setting compensation and benefits. And if you're a larger nonprofit and fortunate enough to have a development staff, because I do realize many of our smaller, mid-sized nonprofits don't have development personnel staff. The CEO typically performs two roles in getting development as well. But the development staff can let you know if there can be contributions obtained for the program that you're offering or new programs that you want to offer. They can also let you know if there's some donors. I've had organizations where significant donors have passed away and they don't think those contributions are coming in. So that there can help determine on your revenue budget, or if certain programs aren't going to be funded due to those loss of contributors or loss of grantors that might be involved. So first step is really to assemble who needs to be on the team and what their roles are going to be. Make sure they're assigned, and said CFO, CEO can drive it and they can assign the roles, but it takes a lot of other people inputting into this to get a good budget. Next one is establish a timeline. And when you're setting a timeline, when you look at this, gee, it looks like we're going backwards. And that's true. I always recommend if you're doing the budget, you actually want to be looking at when you want to do the board approval of the budget. And the rule of thumb, what I would say is should be happening is it should be approved before the new fiscal year begins. So you start with that board date you want to approve it at, work backwards. Maybe some organizations go right to the board. Some have a finance committee. Some might have a separate budget committee, which goes to the finance committee, which goes to the board. So you got to take all those steps into consideration. The other item too that tends to chew up time is once you get it put together, the discussion of the assumptions. I've seen budgets that went right through with the assumptions. They seem good. I've seen others that had to go back and be revised, some of them at the last minute because things had changed or somebody brought up a good point in the discussion here. So make sure you leave plenty of time in the budgeting process here to allow for those discussions to take place to get it approved before the fiscal year starts. One thing there is 6 months before the year end may not be too early to start. Just give you an example, the one board I'm on, it's a membership organization. And we typically put out new membership rates 4 months prior to the start of the next fiscal year. So we're actually starting almost 7 or 8 months before the next year to try and come up with a rate for what the memberships are going to be and look at pricing of other venues that we have. So it really can be driven, not necessarily be driven by your program sources or where you're getting your revenue from too. That might drive this earlier. In my case, it drives it significantly earlier than a lot of the organizations I deal with and provide services to. Okay, one of the other things is now that you've got your team together, you've got your timeline set up, determine your organization's goals. It's very important to make sure that, as I mentioned earlier, these goals correspond with what maybe your strategic plan would be or what the mission of the organization should be. I've seen times where the programs go a whole different tangent, and you look at the strategic plan, you look at what's going on, it's like, well, it's not even close here. So I would recommend that you do that. Also look at your financial goals. Maybe the goals of the organization is perhaps maybe to fund depreciation or set aside excess monies for capital goods. It's a time that should be taken into consideration there. And keep in mind your budget, I believe, should be what the organization needs to run its business for the next year, and should be in a format that individuals can understand it. So it may be you don't have highly sophisticated financial people on your board. It may be best just to do a basic cash basis budget for them to see where things are, put lines in for monthly deposits to capital reserve accounts as an expense, which those on the more sophisticated know that really isn't an expense item, but it helps them understand, people who aren't financially as astute, to see that there is money being put aside and help them understand that concept as well. Because really the budgets would not be audited by your outside auditors or people like me. It's really to run your organization, and it should be in a format to help the goals be accomplished and the organization be managed efficiently. And as I mentioned, just make sure the strategic plans and strategic goals here for the organization align with each other. Okay. Next one here is develop a draft budget here and determine income based on expected and projected activities and fundraising. When you're developing your budget, the toughest item which you're going to have to estimate, in my opinion, is the revenue. If you have, it could be if you were in a fee-for-service setting, such as a hospital or a nursing facility or some other entity providing services, you pay fee for services, you're really probably going to start with last year. Look at how many services you provided, your rate reimbursement for that service, and try and, hate to say guess, or come up with a good idea of what's going to happen in the next year. And if you're in a situation like particularly in the healthcare industry where the reimbursement is regulated, you could have a really good plan coming into the year, 6 months through the year, have a regulation change and end up with less money. I mean, that's just how it goes. But in the control aspect of the budget, you know why that occurred. They changed the regulations. So many things can impact a budget, particularly the revenue through the years that you may not be able to anticipate. So that's going to be your toughest thing to really budget for. If you have it where you know you've got steady revenue streams, maybe you've already got the grants lined up for next year and you don't do anything beyond those grants, you feel pretty comfortable you'll get the grant money, meaning that people are paying them to you are solvent and they will come through with their payments. Keep that in mind if you're receiving grants, particularly from a foundation, and they promised you money. If something happens with their resources are tapped for something else, you may not get that money, or you may not get it at all. If something happens catastrophic and they would go out of business. So there is some risk in getting grants there as well. But if you know for sure that you're going to get it, that you can probably get pretty close then in revenue, but most organizations have some estimation involved there, which makes it very difficult. The area you can probably get the closest to is the cost for each of your programs. Typically, if you're in a situation where your human resources are salaried employees, their costs are going to be pretty predictable from 1 year to the next. If you're given just a straight COLA increase to everybody, typically you could come up with, if you're fortunate enough to know what your health insurance increases are going to be or what you're providing, you can get those pretty close. And from what I've seen in my career is if the people tend to get very close on the expenses, but the revenues can be off. But that's probably going to be the easiest, particularly if you have a lot of fixed expenses in the organization here. And when you're developing the budget, just make sure that you're writing down what all your assumptions are going to be and putting those in writing. Because if you take that budget that you have and you bring it to a group of people to discuss, if you don't have your assumptions written down, you may think you'll remember them, but trust me, you will not. It's going to make a very long meeting. Also, having written down allows people to challenge those assumptions. It may be that the assumptions are wrong, and that's fine. I've seen situations where draft budgets have gone into meetings that I've been involved with, and the challenges make sense, and the budget ends up having to be redone. And that's perfectly fine. It's the idea to try and get it as close as possible to what you think the end result's going to be. And if some assumptions are off, that's fine. That's perfectly fine. They need to be adjusted here for the organization. Here. Next one is reviewing the draft budget here for the organization. And here. This is typically where the time comes in as far as meetings involved with your board members, your committees that you're going in front of. The ones I've been involved typically have a finance committee. The finance committee would discuss the budget with the management. If we feel good with the budget, that would go typically in front of the board, and then the board, they would either approve it or not approve it. Most of them will approve it because it's already been vetted by a budget. There is times we've made tweaks and stuff on the goals and the budgets that we've put out there, but most cases it will go through. But the important thing is making sure that draft budget is reviewed before it actually goes final for the organization, final for the next year. Also, approving the budget process here is presented to the boards, have the board approve it at this time. And then the final step, implement the budget, entering into accounting system. There again, it comes back to the accounting staff, making sure they're involved in the process. They know what the budget is and they're able to get it in. And also, here is one of the most important things of the budget, which I think is overlooked. One is it gives you a plan and allows your program people to see if they can perform the programs and if you can provide them. But it really is a tool. It's actually also a very high level internal control for the organizations. If I'm sitting on a board and management's telling me that, oh, we've seen 20% increase in people we're serving this year, and 20% increase over the budget of people we're serving this year, and I'm looking at the budget and revenue's down 10%, I should be asking the question, well, what you're telling me doesn't make sense with what I'm seeing compared to budget. How can the budget, we be under budget on revenue if we're over budget on the amount of people we're serving? Now, as a healthcare setting, maybe, well, our reimbursement got cut because of X, Y, and Z issues. That would be a reasonable explanation. But if management can't provide a reasonable explanation, that obviously incumbent upon the board or finance committee to push that issue to find out what's going on. Maybe the statements were wrong. Maybe there's something else going on there. But it is a control feature for the organization's board of directors. So don't lose sight of that. Very high level. The lot bigger the organizations, the harder it's going to see pick up variances, because the numbers get so large, and a 1% change might be 1% off budget, could be $100,000 or $200,000. Small organizations, I think the effectiveness is much greater because it's not going to take a lot to show a large variance. And at that point, somebody should be asking the questions about what's going on here with the organization. Some other things to consider here when you're developing your budget: match your budget line to the organization's chart of accounts. So when in the process of doing this, look at your chart of accounts, and I always start with that. I always pull up the chart of accounts. Hopefully I can get a printout showing what the balances were at the end of each month. Some of the software like QuickBooks, I mean, you can just pull the prior year's actual right into the budget for the next year and use that there as a starting point for your budget. I typically would pull that in, export it to Excel, and then at the right side, put my assumptions for each line of the chart of accounts. But it's important to start with that, because when the accounting staff get it, they're gonna have to put it into the system, and it's probably gonna have to put it in by the chart of accounts. They're not going to have the latitude to put in something else. Also, one thing to consider: what basis will the budget be developed? If you're a GAAP basis organization, I'm going to say most likely you'll put it in, you'll have a GAAP basis budget. If you're a cash basis or tax basis organization, you'll have it in the tax. But the one caveat I want to throw out here is the budget should be in a format that your board can understand it. I've seen organizations get into trouble because the board could not understand GAAP statements. The budget was prepared to that. They were making all kinds of revenue as a healthcare entity, but they weren't receiving any collections on what they were billing. So in the healthcare world, it's not only billing, but it's collecting. The organization literally ran out of cash. Like, well, how can we do it? We're making money. We're over budget. Well, the problem was the cash wasn't being collected. They were sending out bills. The bills were getting rejected. They were taking a long time to get the bills resubmitted, and it actually ran out of money of the organization. In that case, you could make an argument it should have been cash-based budget to see if they had the money there in cash flow to cover their operating needs. In fact, the CFO that came in actually took all the records and put them on cash basis until they got back on a more stable footing, because they were literally operating week to week based on cash flow. And that's not a situation anybody wants to be in. So I would reiterate saying, typically you will have it on the basis of accounting for the organization. But if your board's having trouble with understanding it, having it on a cash or income tax basis, something they can understand, is much better than having it on something that no one can understand. Also, if you're doing coming up with benefits and stuff for your staff, just some rules of thumb, you could use a pooled benefit rate. Look at what the benefit rate per employee is, or cost per employee. Just multiply that times the number of employees to come up, and put that in your budget to try and save time. I think the next one we've already talked about: be realistic or conservative on your projected revenues. More likely than not, it's easier to fall short on the revenue, I found, than have the revenue go over budget. We all want the revenue over budget. I've never heard anyone complain about that, but when it falls under budget, that's when the complaints start. But I'd rather go in, if I was building a budget, with a very conservative budget, and exceed the conservative budget and come up with an aggressive budget and fall short, and then not have the surplus funds we were looking at the end of the year. I do not want to be in that situation. Also, if you think there's going to be unexpected cost increase, build a line for unexpected demands or cost increases. I'm not an economist, but I'm expecting inflation to rise here. This might not be a bad idea to put this year, to put another line in a budget for unexpected cost increases. What that is, I don't know, but this would probably be a year of money we have floating around out there. I know just one organization I'm the treasurer of, we just got a 15% increase last month in our trash bill. Blamed it on tight labor markets, cost of fuel, supplies for the trucks, whatever that is. I mean, so that just happened. So there's a 15% increase in 1 month. So also develop a budget for capital expenditures. We talk, this presentation here mainly focused on operations, but having a budget for capital expenditures is very important too. I think having those laid out over the years, when you're going to pay for them, if you're going to buy them, if you can buy them straight out of cash, great. If you're going to finance them, you'll need to know that, and how much debt service. The surplus of the organization from your operating budget will dictate if you can service a debt, or if you can buy the asset outright, or use your savings and then pay it off over a couple of years internally. But I also believe you should have a capital expenditure budget in a time period for when certain items are going to be replaced. Also want to point out one thing. I say, well, people think we have to balance the budget. We have to put something in an expense. No, you don't need a balanced budget. It does not have to come down to zero for the organization. I've been on organizations where we've actually budgeted for a loss, knowing that in the future, though, we were going to do some rate increases, which were going to counteract that. So having a deficit budget too is not a detriment, as long as it's not a repeat. So you've got to be looking. So we have a deficit this year. What are we going to do next year to fix it? And is what we're going to do to fix it feasible or not? If you have a surplus, that's great too. That becomes what you're going to use to fund your capital expenditures and growth. I would say large organizations should have budgets by departments or program function. Typically, hospitals would have budgets for each of their various departments, each of their various service lines for them. If you're just a one program nonprofit, it might not need to be as important, because there's just one program you're offering. But if you have several programs, 2 or more, and the larger you get, it would behoove you very much to take your budgets and break it out by the various departments. And this comes back to monitoring a budget. Monitoring the budget should really occur monthly. That's such as monthly comparisons of budget to actual, year-to-date comparisons of budget to actual results. So you should always be comparing your budgets to your actual. And I want to point out that not only have a yearly budget, but you should really take that budget and break it down by a month. So on a monthly basis, you can see whether you're hitting that budget or not, as well as year-to-date hitting the budget. A lot of people just do a year-to-date or a yearly budget, and you don't know, oh, we're at 100% of our revenue at the beginning of the year. Well, that could be true, because you don't get any more revenue the rest of the year. But somebody looking at it's going to say, oh, we have 100% in the first month. We're going to have 12 times this revenue at the end of the year. Well, that's not true. But if you have a monthly budget, you can see it's, well, we got all our revenue this month, next month, oh, we don't have any budgeted. That's because we get it all in month 1. So I think it's really important to do monthly budgets and then do the comparisons with the month-to-month actual, year-to-date to actual for that. And that is really critical to allow proper control and oversight of the organization here to occur. Get back through here. There's something I had missed here. No, I guess I can't find it, so I guess it's not here. Oh, when you're doing your budgeting, it's possible you may have, and it's a good thing to find this out, programs that you're losing money on. This is why having program budgets is important, that you're losing money on, and other programs that are covering that. And I've had organizations that have made decisions that they will provide that service at a loss because no one else is in the area. But they've also been wise enough, the successful ones, to say, but we're making money in service B, and we're going to use that money to cover service C, which is our money loser, but the community needs it. And that's fine. But if you're in a situation where your program A and B are just breaking even and C is losing money, I've seen this situation where C continues to lose money year after year after year, and the organization goes out of business because it drains all the resources. Having a losing program that you budget for is okay, provided you have revenue from other sources to cover it, and the board agrees to that in doing your budgeting. But you can't have it one program pull down an entire organization. At that point, you would need to make change and cut that organization. In the case I'm referring to, the client, the board, management, I should say, should have started with management, could not pull the strings to get rid of the albatross, and the albatross sunk the ship. So, but keep that in mind too. And that's why I think one reason having program budgets are important, to really see what you're doing with that program. It could be that one's making all kinds of money, one's losing, but you don't know that until you actually break it out in detail. Also, when you're doing budgeting, it gives you the chance at that time, going back to what Aaron said, to really dive into your cost functions, your direct costs, your indirect costs. And if you have your budget between fixed costs and variable costs, you can really do a break-even analysis. How much program service revenue do we really need to break even? How much do we need by this program to break even? As you're putting the budget together, you're going to have a lot of numbers and a lot of information already pooled. At that point, that would be the time to run those calculations. The one board I'm on, I always like to do that, run the calculations and say, hey, we need to get X amount of people coming to this event in order to break even. So just keep those things in mind when you have that out there. At this point, I'll turn it over if I have any questions or anything came in, Christina.